The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour. Me, your humble, lovable, and squeezably soft host. Once more, we go into the breach, dear friends. Volume pretty much in line with yesterday, 2.6 billion shares. I think maybe there was a little bit more volume yesterday. We're going to go into several things going on in the market and some questions from readers on why I was fairly sure we were going to get a significant and prolonged, at least into next week, bounce in the market. And I'll show you that, all along with some of the methodology that I use. Right now, we're at 2020 on the S&P cash. Volume comes in at 2.6 billion. That's up just a hair under 20 points. We got to 2027, which would have been up, of course, 27 points. And we've just been kind of meandering around. Every time the market looks like it's starting to roll, there's a lot of shorts jumping on the market. I don't see if you didn't sell yesterday that you're going to sell today. So for the most part, I just assume that a lot of what's going on here is a handful of people either trying to cover their shorts and they don't want the market to go up any higher, or they want to buy down here. But certainly the effort to blow the market up looked to me somewhat heavily overblown, as I've said over the last few days. Frankly, I don't see the whole idea of why the market needed to blow up. I understand that it did. Sometimes the press tends to blow things out of proportion, mostly because they have a political agenda. And that political agenda now is to try to scare everybody into the Western socialism and democracies of the EU. Unfortunately, it has already been proven to be what everybody would expect from socialism. It's been tried since the actual beginning of time, recorded time anyway, written time, and back for somewhere between 4,000 and 6,000 years. It has always failed, and probably not any new reason to think it has too. I will probably get into a discussion of this later, because I actually heard a person ask why they would want to leave. So I'm just assuming that they didn't listen to me 2 weeks ago on Monday when I told them all the reasons why. After the vote, you have to say, if I don't understand why at least half, a little more than half, would vote to leave, that I don't need to do a little research to find out why that actually is. But well, maybe we'll cover some ground again on that. As always, we like to meet here at this time.
The following takes place between 2 p.m. and 3 p.m.
And it takes just a little bit of preparation to get this party started. But of course, it's always started with history, because if you don't know your history, you are doomed and damned to repeat it.
Then it's all just a little bit of history repeating.
Well, we got a lot of history today. In 1887, John Sith Doc Pemberton, an Atlanta druggist, receives a trademark from the U.S. Patent Office for his new and popular soda fountain drink containing the properties of the wonderful coca plant and the famous cola nuts, but mostly cocaine. It was later changed, if I'm not mistaken, in 1912, somewhere around there, where they actually took the cocaine out of Coca-Cola. Although I understand that if you go to Mexico, there are still trace amounts in the U.S. left over from coca plants, but it's so minute that it would take, I don't know, a couple of gallons to actually make anything that would even start to make your blood have a little bit more pop to it. But in Mexico, my understanding is it's why it's not high. It is much higher. People love that actual sugar, the real sugar, not the cane sugar in it. Or maybe it's the cane sugar in it. Not the, yeah, I think it's the cane sugar in it, not the corn syrup sugar in it. But also has a little bit more cocaine in it, a little bit more upper. And what else can you say? 1887, Coca-Cola, one of the iconic American brands, starts off. In 1939, Pan Am Airways begins the first regularly scheduled transatlantic passenger service with its Dixie Clipper. Pontoon plane takes off from Port Washington in New York's Long Island Harbor, bound for the Azores and Lisbon, and then Marseilles. I've been there, and I can't even pronounce it. Ticket price was $375 one way, about $4,800 in today's money. And, of course, that didn't last long before the Nazis really started getting going. But you could get 6-course dinners and a mere 22 hours of flight time. In 1995, the beginnings of the dot-com bomb starts off with a Mosaic web browser from the University of Illinois. I had left that small town a brief, 5 years earlier. And one of the guys in the computer club there is now one of the luminaries of that company. It came out and sold 2 million shares on the NASDAQ for $8.50 a piece and closed at $27.25, paving the way for the internet stock boom and bust. And that pretty much wraps up history. Of course, many people in the den talking about it today. I've written about it a while in the Tech Insider, and that is more and more dot-commers are getting involved in politics, but that also opens them up for huge amounts of hypocrisy. From the Google guys driving Priuses and electric cars around and then hopping in a 787 and flying it with 5 people on board to various places in the world, buying their own airports, and then using more fuel in one trip than most people will ever use as a percentage of their place on regular airlines. Hypocrisy is very tough. And I wonder if these people even have any idea how easy it is. But when they try to put themselves up as a luminary, as the visionaries, almost always it comes back to bite you. I'm sure there's 1,000 things that I wouldn't want to be made or have made public. But we've talked about it for a while. Of course, Mark Zuckerberg just a week ago changed the rules. There is no way, even if he kills somebody, even if he wipes out major towns and hires his own private army to kill children, can he be removed as the CEO from Facebook because of the way things work? There may be some kind of law in California where if you're actually in jail, they can finally get rid of you. But I've always thought for the last few weeks that he ran the risk of becoming our next big Rosebud Citizen Kane. We'll talk a little bit about this in the Move On. But remember, some pigs are more equal than others, and it has been since the beginning of time.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Volume is pretty tepid here, and it has been for a few hours. 2.7 billion shares as we start this segment. But very interesting that a lot of .com heroes have become incredibly active in politics, but they all have pretty wide and huge holes in their logic. The more they get embroiled in politics, probably the worse their stock will do. But always check out Animal Farm. It will tell you probably one of the best books ever about people that I guess now called the elites, the globalists, written in 1946, I think, if I'm not mistaken. One of the best books ever written by George Orwell. But nothing has changed in the 60, 70 years since he wrote it. Pretty much everything is the same. And you'll see all the usual suspects in that book that you see today. Of course, I guess I didn't say it if you're not watching on here. Mark Zuckerberg, who is against building a wall, of course, is building walls around everything he owns. The president, of course, who is against fences, is building an even bigger fence around the White House. So it is don't do what I say, do what I tell you. What else is going on? It is a mad world. And one of the most interesting things that we did talk about, in fact, let me see if I can't get it up here. There it is. Let me run this while we are talking. First thing was how many stocks that were close to making a Gartley list yesterday. If you take the subscription for Art of Timing the Trade Charts, every morning you will get a Gartley list of stocks, equities that look like they are making some kind of Gartley pattern, either close or fulfilled that Gartley pattern. Sometimes there's 2, sometimes 3, sometimes there may be as many as 10 today or yesterday at the close, we actually had about 40 of them. And that continues to kind of ring through today. When you have that many patterns all coming together, you have to kind of take a look at it. I thought we would go through some of those today, but quite a list. And as I said yesterday, I thought probably biotechs looked like they had the ability to come in and finish their Gartley patterns. Now, one of the things that was interesting to me is just how good a lot of these biotechs started to look yesterday. One of them is this big Amgen Gartley pattern that came in here. I really like it when one thing happens, and that is that the X to A part of that Gartley pattern has a significantly higher energy on the way up than the C to D. This did actually have that. It was 25% lighter volume on this C to D pattern. And that's one nice thing. It pretty much did, it went to 0.81 on the downside yesterday. It went to 0.78 on the upside on the C point. So if you want a good looking Gartley pattern out here and watch how a lot of these things actually come in, that's it. One of the other reasons why, besides all the Gartley patterns, I'm going to show you the scanner that I use every day to go through the stocks. I've got a universe of about 5,500, 6,000 stocks or equities and ETFs that I scan every day. And this is the scanner. It's not meant to look pretty or anything. It's meant to basically go through all the patterns that I have. It is not correct. Basically, it dumps out a file, and then I go through all the stocks at night on them. But I want to show you something out here, and that is that one of the scans, I've got a bunch of different ones, the Gartley butterflies, double repo patterns, flat lines, Lazarus patterns, swing tests. I've got a bunch of different things. They all get actually dumped into one file, and I just go through all of them. But one of the things I have is it dumps out how many stocks on the at night when I run this about 7 or 8 o'clock at night, how many did what's called proving the point. That is, go to a lower level and do it with lighter volume. You'll see that all these check boxes here in this column where I'm moving the mouse down are checked, which means that went to all these stocks. And by the way, I can continue to scroll through a couple of hundred, maybe 250 stocks that actually proved the point yesterday. They went below, didn't necessarily close back above yet, but did go below previous significant swing points with lighter volume. And of course, depending on whether or not it is a possible ABC up or down, this little checkbox out here says bullish. So I know that these are stocks that went lower. They went lower than a previous low. They went lower with significantly lighter volume than that previous low. And normally I'll have, I don't know, 20, 30, maybe here. And yesterday we had about 250. Put that together with stocks like Amgen that are making fairly nice Gartley patterns and telling you that they're doing it with a lighter volume means one thing to me, and that is why we had a very good comment from John in the den about the weakness in financials. When they sell one, they'll go buy another. And if you can't win if you don't play in the stock market, and the first thing is that they will either go short the market or they'll take that cash and they'll go somewhere else. Cash sitting around can't make any money. Now, they may let cash sit around for a while, but for the most part, these big men of the street are fighting every day to scratch out just a few more cents to make sure that at the end of the year, they have the best possible returns. They're not very bold about sitting on the sidelines. But right now, not a lot of movement out here. As I said yesterday, I suspect that we're probably headed up somewhere between 2040 and 2070 for Friday's expiration. But again, what do we have starting tomorrow? It is fun buying. So let's look through a few more of these Gartley patterns that were out here so you can see them. You know, some of them are not formed as well. AutoNation, very interesting to me because this is a pretty horrible sector. The Gartley isn't one that I really like out here in the fact that it's well formed. It's kind of poor, but it did get its 77% retracement out here. Did go up a little higher and come down today, but you didn't have exceeding volume going through the May 19th low, so not as good as Gartley pattern, but one that did form and have other issues. Some are still out here starting to try to make lows. This would be, of course, one that you look at, and if it may not be easily seeable on Tiger TV, but the energy on the C to D leg of Eris actually expanded. So I would not be buying that as a Gartley pattern, even though it might find a low at $19.68. Too much energy on that C to D leg. So we'll go through a few more of these Gartleys, because this is what they say is a teachable moment where there are a lot of these stocks out here making Gartley patterns, so we can see what makes good ones and what makes bad ones. More energy on the C to D on a bullish butterfly, not a good thing. We want tiny volume.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, you want to look at Eris. I wouldn't buy it as a Gartley pattern. You do have to kind of think when it breaks the X point, you want to see higher volume. Well, on this one, 6.4 million shares. Yesterday, what did we have? 2.2 million shares as it broke the big time low out here. So can it still push down? It can. But again, I don't like that the additional energy on this one. I would probably look for others. We'll just go through a bunch of these as much as we have time for. Like I said, today is one of those teachable moments. Bill Barrett Corporation, another one. This one still could get to $5.74, so another 50 cents down. What you want to see, of course, is lighter volume as it passes the B point. Yesterday, we had 1.7 million shares. So if you got down to 574, it would be a very interesting move. And the energy in the C to D would be significantly less than the X to the A on this one. B Aerospace, another one. One of the things I dislike, as I said, is when there's more energy. And if you could see it, it's 2.2 over here on the C to D compared to 1.7 on the X to A point. So that would kind of disqualify it. I also dislike these huge candles out here, so I would probably move on. It may be making a bottom. The question is whether or not you can make any money off of it. Now, Baker Hughes, much better Gartley pattern out here. Didn't quite get to the 7-8 retracement out here, but that's actually just a little bit bullish on this. Good-looking Gartley pattern. I really like the X to A energy on this one. If you can't see it, it's 5.4 on the way up on my power law vector indicator number. It's 3.3 on the way down. You've got a bounce. Do you still have the risk of this thing going to $40.86? You do, but dollar risk on that does not look all that bad. So did it bounce or did it bottom yesterday? I suspect that there's a good opportunity that it did. It went through the B point that had 5.8 million shares on 4.8 million shares. So what else do we have out here? We'll just try to do as quick fire as we can on this one. Beneficial Bank Corp, kind of interesting. No real bounce out of that one today. I don't know it well enough. Bud. Now, this one is very interesting. Not sure it's a Gartley pattern. This thing, it did rock and roll off its B point yesterday, 3.6 million shares with 2.5 million shares. Certainly looked like it was going to try for a Gartley pattern. The energy on the way down, though, probably a little much for me. I would still suspect that that could hit the 115.37. CBI, to another Gartley pattern, got down to 1.22 on a bullish butterfly. Energy on this one significantly lighter. I do like this. It's back into two gaps. And if you are playing these Gartley patterns and looking for likely areas where these turn and you wonder why they don't perfectly hit the 1.27 return, a lot of times you need to be looking on the left-hand side of the chart. And in this case, our two nice gaps up, they're probably going to act like a little bit of support. You got in through the first one yesterday, kind of touched the top of the second. My guess is that if you were going to be playing it there, 31.74 was the risk on this. It got to 32.16. That's about probably as close as you're going to get on that. And certainly the energy down 1/3 less than the energy on the X to A legs, which is what I kind of look at. The B to C legs tend to be a little bit weaker out here on the power law vector indicator. So I don't spend a lot of time looking at that. They have to be incredibly significant for me to look at. Another one out here, Calgon Carbon Corporation, CCC. And by the way, you can always give me a call at 877-927-6648. You can email me at path@tfnn.com, and I think I got a couple that I'll try to answer before the end of the show. And, of course, always put a message in the den. What else is going on here? Another one that looks actually fairly good. Hasn't bounced yet, but, man, very light volume in this one. I certainly like the lack of energy compared from the X to A on this one to the C to the D one, if today is, in fact, its low. Energy's off about 25%. Now, the question you have to ask is, did it break the B point with volume? Like 1.4 million shares compared to about 400,000 shares. Even when it gapped down, it did so on 1.2 million shares. So even that B point a little lighter. Now you have to look at this X point over here as it's busted through. $12.39 is the D target on that one. Let's see, what else do we have out here? This one had about equal energy from the C to D pattern on it. This is Celgene, but pretty close to making LO. I would say that on this one, the bulk of the biotechs look like they were in for a bounce, so I would have probably avoided that one and looked to others. A nice one in here in Checkpoint Software. It doesn't look like it's totally found a low in here, although we've had a nice bounce in the S&P here in the last few minutes. 2024 on the S&P cash volume, 2.82 billion. Again, my target area is going to be somewhere between 2040 to 2070 by Friday. And of course, starting tomorrow, fun buying through Friday. May have a little bit of fun buying when we come back. Light volume bounce so far in Checkpoint, but I do really like the X to A point on this one, 2.7 to the C to D point on this one, if that's yesterday, with a 2.2. So the energy really did not come in except for a couple of days out here. Your risk down on this one is 75.56. So very interesting. ERII, what's this one? Energy is about the same. This is energy recovery. I don't think the energy is the strongest of the bunch. Fastenal Company, I really like this one. And this one really came off with some light energy in the C to D compared to the X to A point. You also really never, kind of had about 3.8 million shares on the break of the B point on this one, which happened on the 24th. Yesterday, 3.2 million shares. So since you've gone through this B point out here, the volume has been about half. And if you're trying to, we'll see if we can't go through more charts here before the end of the day. I seem to be rocking through a great deal of these, but this is all what you should be looking for, and is the overwhelming truth of the matter if you back out the stocks in the energy sector and the financial sector. FLR, which is Fluor Corporation, pretty nice looking Gartley pattern out here, and a nice bounce. Maybe a little bit too much volume yesterday. Maybe you get back to 45.80 in this one. And of course, going into the weekend, you need to see a little bit of squeeze. I suspect the best performing ones will be the ones that are the most heavily shorted. We'll try to get into that one after this break. But a great deal of these stocks out here with some decent Gartley patterns, with the C to D having significantly lighter volume, and the B points not being broken with volume. So this is what you're looking for, an embarrassment of riches in the Gartley patterns. We'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY or periodic rate of interest is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're going to get back. As we said, we got a ton of Gartley patterns and a ton of other patterns to look at here with lighter volume. So I know a lot of people probably are buying into the incredible hype of the Brexit, but for me, to me, this smacks of them wanting to move the market and shake out the weak hands, at least for a while. But too many, I said it in my newsletter yesterday, and that is maybe even today. I can't remember. But for me, the index volumes were the tail wagging the dog. It wasn't the dog wagging the tail. All the volume in the indexes are supposed to be reflect what's going on in the underlying stocks. And then sometimes, especially over the last few days, it's been the indexes driving the actual stocks and not the underlying. And that's why we had so many stocks out here with a lighter volume testing previous lows and giving extensively bullish signals in this market. So I can't get too wigged out. I think that there were a lot of people in the financials thinking that they were going to go higher, looking and believing Janet Yellen that interest rates were going up soon. Now we know that's probably not true. And so they're all abandoning the banks. We'll probably see that everybody tries to rally the banks 2 or 3 more times. Then eventually, they will actually rally and continue to rally, but not until that's really out there. I suspect a lot of people were in banks thinking that, and they'll get out of those and they'll go to somewhere else. Money will flow to the hot spot. It's just not going to be banks for a while. Probably not going to be crude and energy for a while either, and may not even be gold and silver for a while. 5' Therapeutics, this thing still needs a little ways to go to be a Gartley pattern, but I certainly like the C to D on this one. This is what you want to be looking at, 1.5 compared to 3 on the way up. Now, yesterday it tested the B point. 1 million shares with 610,000 shares. Now, maybe that's just a test of that pattern out here, but in any condition, I can't look at that as bearish. Energy on the way down, very light volume test. And that, like I said, is the reason why I've got probably 250 stocks out here that don't even have Gartley patterns that are actually showing some kind of low out here. Gannett Company, I don't know if I'm into the press. Again, energy was way too much on this C to D leg. Actually, it was 25% more in the C to D leg. So that one would be one that I would avoid. GPI, Group 1 Automotive, energy was off by about 25% in the C to D leg compared to the X to A leg. You've got 1.21 retrace so far, but fairly light volume. And I don't see a whole lot out here. You know, I'm not big into autos. Certainly, if I was short, I would be out of it. I don't know if I would be long it. Hexcel Corporation. This one had a nice looking Gartley pattern. It's still down here. When it, you know, probably not one of my favorites out here, but we'll move on. We'll find some other ones that are more teachable out here. Infinity. This one actually looked pretty good. It's got a gap about 17 bucks, so I suspect that you want to look at that. The D target's also 1689. If you find something like this with a big fat gap out here, I suspect that discretion is the better part of valor. I would look at that D target 1689 and see whether or not INFY is exactly that. But if you got a gap, I always defer to the gap and say I would rather be waiting and hope that it went lower to get in than to buy it and have it go down. As like I said, there's like 45 Gartley patterns today when there's normally 2 or 3, maybe 5 or something. Another one, INPHI. Don't know this company, but nice Gartley pattern out here. You broke the, unfortunately, you broke the B on higher volume on this one, 1.4 million shares compared to 900,000 shares. So you just say, move on. J&S, this was one that came down, and what did we do here? 2.6 million shares. So just a break slightly ahead of the 2.4 million on the B on Janus Capital. Energy is not all that exciting, though, on the C to D leg. It's down a little less than 20%. So there's probably better out here. KSU, these rails look very interesting to me. 2.6 on the way up, 1.9 on the way down on the power law vector number. And that's from the May 31st high to this low of yesterday, June 27th, a nice little pop in that. So kind of interesting. The thing that like I said before, I want to see these gaps pretty much filled. And that gap that we have on the 8th of April, this got filled yesterday. You pop back right back in it. Support's probably going to be pretty good around this level. You know, the rails, maybe they're washed out here. This is not a bearish looking pattern to me. LECO, to Lincoln Electric Company. Another one. The C to D was too much like the X to A on this one, so I would move along. The volume also broke the B pattern, the B point out here with significant volume on the 23rd, so we'll say next. Another one that tried to go through its B point yesterday, so we figure this one out. Laredo Petroleum, as we said, the financials and the energy sectors, probably the weakest of the ones I've gone through. The C to D is very light on these, though. So maybe this was just a head fake yesterday. And the energy wasn't that much of a blowout either. 3.6 million shares on May 23rd compared to yesterday's 4.4 on Laredo. A close back in that above that May 23rd low would say that you certainly wouldn't want to be short. And depending on what we get, maybe even a little bit long. But I'm not a big fan of it. I think probably right now on my no-touch list is financials and energy. To a great-looking one, Southwest Airlines. Nice little move down. The question is, did the B point get broken with more energy? 5.6 million shares on May 6th. When it went through that, it had 15 million shares. So we'll say sayonara, see you later. But was the energy from the X to A and the C to D more? It was still a little less, actually. So not as bearish as one might think. Another good pattern out here is Marriott International, MAR. Well, we'll take a look at this when we come back. But, ooh, nice, tasty 3.1 compared to the 5 on the X to A. How'd it do on the B part, though? That's the question. We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Deer is called venison. Lamb is called mutton. There is no special word for bear meat other than bear meat. But I think that's what's on the plate for tonight. Up 30 points on the S&P cash, cruising through 3 billion shares on the New York Consolidated Tape. Some other ideas out here that we're seeing in these Gartley patterns. In fact, for the most part, I'm doing this as a public service because I know a lot of people haven't seen this many Gartley patterns form at once in the equities. So I think it's very interesting to go through. And two, we've got some videos on the website, but I have a feeling a lot of people have ignored Gartley's and equities for a while. So we'll continue looking at this one. Anyway, MCEP, didn't know much about this one. This is a big natural gas play from reading about it. Don't know it specifically. It is kind of a low volume stock too. But this is what I look for in a Gartley pattern. On the X to A, Very strong energy, 4 on my power law vector indicator number, less than 2 on the way back down on the C to D. You had some decent energy as it broke the B point on a little bit more volume, but not a bad looking stock out here. If you're in for pennies, if you're looking for a natural gas play, you might want to take a look at something like that. A lot of people selling penny stocks when the market comes back down. And one of the things I like is total disinterest. I have a position in the Tech Insider that just literally has been ignored through everything that's happened through Thursday. And there's nothing more that I like than a stock that doesn't go down and is completely ignored, because those are the kind of stocks that you wake up one day and you see them up 20, 30, 40%, and they act like biotechs, and everybody is surprised. Kind of that Lazarus coming back from the dead. They just kind of sit up all of a sudden, kind of like Game of Thrones when the guy came back to life. He kind of laid there for a while. The spell had to kind of ruminate, I think. But Jon Snow just kind of popped back up. That's kind of the best description I have on those. But there's a little penny stock for you with excellent risk reward, I suspect. News Corp, another stock that came down. Volume fairly light yesterday in comparison. Nice Gartley pattern out here. Energy on the C to D, not all that exciting. Not a bad looking setup. I'm not big on buying it, but another one that you might want to look at if you're getting familiar with Gartley patterns in equities. Another nice setup next to our broadcasting group. You know, with the election coming and all the money to be spent on it, these tend to do very nicely. I remember Tom was always in a good mood in an election year, or used to be in a good mood during an election year, because he was making a lot of money up there in his radio station in New Hampshire. For all that money, they just kind of threw at him for all that. But that is being nice. QLD, we'll take a look at that one real quick. ProShares. And, you know, again, when we look at that energy from the X to A and the C to D, you really want to look for a contrast in that one, or I do with my power law vector indicator. 2.7 on the way up, 2.2 on the way down. And man, do I have time? I don't. But man, we still have a ton of shorts in this market. I suspect that they will start blinking in that 2040 to 2070 range. Look for a big spike to let you know that the shorts are crying uncle. We will be back tomorrow. Same bat channel, same bat time. Remember to let the shorts have your longs when they tell you that they're ready to get out. Don't let them out easy. Let them out, make it hard. See you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.